Good day, Divergence traders. It's Friday today. It's non-farm payroll day. But non-farm payroll has passed. Do you see? No, this is the 8:30. No, this is it. Do you see the big fucking baton? A baton has two wicks and a body. A wick on the top, a wick on the bottom, with a body. I call it a baton. in English, that's French, baton. And in English, it's called baton, I think. You know, those sweet young girls, they're like 16 and they're all on the edge of the football field and they're flipping their batons. Yeah, for their team, right? Their football team. Anyway, there's the baton. Okay. That's a bad thing to trade at that time. Don't trade at that time unless you know what you're doing. And even then, I still advise you don't fucking do it. Because it'll kill you. You know, see, it went up, went down, came back up. Who knows what it did in between here? We're not going to go looking. So anyway, we actually did have a trade here. I thought we didn't. I see it now. I've told you before about this trade, how it's hard to see it. It's right here. When there's a big wick from a news event. I've showed you this before. If you've watched my channel, you would see that. You watched all the videos, that is. There's a lot to learn in here from this old fart here. So anyway, you would have got long right here. Right? Oh, there's the train. Where's the train going? It's going somewhere with Toyota cars. Toyota Corollas. They make those a few miles from here. Yeah, here in Cambridge, Ontario, Canada. Yeah, that's where I'm from. Anyway, so it crossed back down, scared the living doo-dah out of you, but look, it never came back. Your stop would be right here, right at the low of the wick. If you would have got in right there, you would have had an 85-point stop. Okay? So it would have went against you 35 pips, but then it came up, and I bet you got your 85. There's 85 right there. You would have got your 85 from this trade right here. Okay? But say you didn't do that trade. Say you were looking for a lower close, buy it up, it goes trade. Okay? This is the NASDAQ 5-minute. Okay? So as you can see, it just borderline closed on the 7. You know, the lower close here. But still, if you were to buy it, okay, say that you disqualified that trade. So there's another entry point. I've never taught you about it yet until now. I'm sharing it with you. So instead of entering on the on the lower close, you'd enter on the close of the next candle right here. Let me put a line there. You would have got in right there. Okay? Right there. Did it work out? Oh yeah, but it was right before the news. That's the problem. So if you got in just before this candle closed, it would have jumped up into profit for you right from the get-go. So you got in just before it closed, like 5 seconds. You would have got in right there. You would have got like 22 pips instantly because it would have jumped up. There's 50 pips. Well, it kept going, 90 pips, and another one, 113 pips to the top. So you would have got in right there instead of right here at the opening of the bullish candle. Okay? Okay. It was a good trade. Now, let's look at the S and the P. What did it give us? Yeah, it gave us that same trade too. Look at that, eh? Low, retracement, lower low. See? That's divergence. Right there. You would have got in right there in the opening of this candle right here. right here. So your stop would have been 17 points, and it went up 8.5 points. Then it went against you about 4 points, and then it went up 30 points or so, 29 points. You would have got your 17 points. You would have got it up here. And along the way, we had two beautiful, you know, lower close, buy it, up it goes. Lower close, buy it, up it goes. See that? Two beautiful trades with almost, well, no. This one almost zero drawdown. This one you had a little bit of drawdown. Oh, well, nothing too scary, you know? And then we go on to the Dow. What did it tell us? Well, it had the same trade too, the exact same trade. You see how they copied each other? Low and lower low, right freaking there. And right here. You would have got in right there, exact same time, exact same bat channel. Batman. You know, he says, tune in tomorrow, same time, same channel. Batman. I like Spider-Man better than Batman. Anyway. Just like I like cars better than trucks. Fast-looking cars, like Lambos. Yeah. Or a 1970 Challenger. Yeah, it's cool cars, man. Or GTOs. There's lots of channels about these, you know, backyard mechanic guys who go and buy these cars that they find out in the bush or in an old barn, and they get them going and they drive them down the road. Yeah, it's really cool to see those old cars. Those cars are so cool. So cool, man. So freaking cool. Okay. Cars that you know, GM, Chrysler, Dodge, Plymouth, cars that they sold from anywhere from like $1,200 to say $2,500, $3,000 back in like 1970, and these cars restored today are worth, oh my God, like a 350 GT Mustang. What do they call that? That guy who made the car. Oh fuck, I forget the name right now. If I think of it. Shelby, 350 GT Shelby, fastback. Oh yeah, you go and try and buy that car today that sold for like $3,000 back in 1967 or whatever. You know, just what's worth today? They sell them in the auction in Vegas, like freaking 200, 300. Some go for 500K, man. Can you believe that? If you got everything to match all the tags and the numbers and everything, it's just crazy. Crazy prices. Anyway. Okay. So you would have got long right here. Back to the fucking thing here. Your stop would have been 96 points. This is the Dow. There's 50 points. Came back on you a little bit. Didn't come down here to your stop. Your stop is way down here. Just it came down here against you, but look, it went up. 200 points. So you got 2-to-1 win-loss ratio on that trade. Okay. Then we had two more doodah trades right here. If you missed this trade, then you would have got in on this one. Lower close, buy it, up it goes. How much did that net you in pips? 103. Here's another one. Lower close near the 5. Remember, you don't do the first one. You don't buy it here. You got to, because it's too far away from the 5. You got to wait for it to come smacking in and kissing the number 5. Then you buy it. Then it goes up and you make money. Yeah, make money for your honey. You know, your honey that gives you the honey-do list? Saying you got to go do this and you got to go do that. Be a good husband. Yeah, that kind of honey. 122 points there to the top. from that entry right here of the, what do you call it? The Dow. Very thirsty today. Holy shit. That's probably from that bacon and eggs. Breakfast of champions. Okay, so there's your two pullback trades, and there's your divergence trade setup right here. Okay, and up here, no, there's no divergence. There was divergence over here to sell it, and down it went. Let me show you that one from the UK session. Would have got short right there. Stop would have been very small, 20 points. And it went down to here like 79 points, long before non-farm payroll. Let's take a look at the pound now. Oh, look at the pound. Look at that shit. Jesus. So it went down, the initial spike down, 59 points. And there's a trade up here. Let me show you real quick. Boom, boom. And boom, right there, like that. You would have got short right there at 7 o'clock in the morning before non-farm payroll. You would have got short right there, see? You put your stop just a little higher, say 10 pips, never got you. And if you had the balls to stick with it into the news, well, it went down 69 pips. Not that you would have got 69 pips, but there was a total of, say, 60 pips with the bounce back, even 50 pips. It bounced back here. You have the potential to grab 50, 40, 50 pips out of it. Okay? Then we have this here, you know, it looks like it's divergence. I wonder if I could make divergence out of it. I don't think so. Oh, actually, yeah, I can. Let me show you this very, very intricate setup of hidden divergence. You got to get it right on now from the bottom. Hold on. Let me line it up. That one and that one. Okay. So this goes over here. Where does this one go? Right here. Right here to this one. Now, that's not divergent. You know why? Because they're both heading down. This one needed a bigger bar down here like this for it to line up and be divergence. No, that wasn't divergent. Forget it. Forget it. Forget it. See ya. Wouldn't want to be ya. But look what we have here. Look, look, look. Do you see it? Do you see it? I see it. Look, look, look. This is beautiful. What do I call that when I put an X on that baby? Huh? If you've been watching my channel, what do I call it? I call it this. We have a candle that closed up above, stayed bullish. Then we have a candle right after it that they fucking smacked it right back down below the two moving averages, closed near the low of the candle. What was it telling you to do? It was telling you to sell right there, man. Your stop would have been there, 21 pips. And it went down how much? 51 pips. See that smackdown? Isn't that fucking beautiful? It's beautiful. Yeah. They fake the buyers out, and then they smash it down. They know their stops are right freaking there. And then they keep going with it. For the suckers who held on, said, oh no, it's going to go back up. It's going to go back up. Didn't even touch the pivot. It's going to go back up. And it doesn't go back up. And it goes down and closes lower for another 5 minutes. Then it goes down even more and closes for another 5 minutes. And another one, and another one, and another one. Until it sucks all your money dry. Because all the people that were buying all the way up these two motherfucking candles here, where would they put their stop? If you were buying in here, or here, or here, or even way the fuck up there, where would you put your stop? You'd put it right here, wouldn't you? And what did they come and do? They come and got your fucking stop. That's what they did. That's why all the time, if you've ever heard this saying, buy low, sell high, well, we know it's impossible to do that all the time, right? But if you really look at your chart and you go, hey, should I buy up here? It's going to probably keep going. No, because it just came from way the fook down here all the way up there. You don't look. Even if you were scared to buy it down here, that's okay. But up here, okay, you don't buy it up there, even though they took it right back up there. You look for a sell. And this smackdown is the sell. You look for a divergence. You look for, you know, a lower, higher close, sell it down it goes. You look for a smack trade. You look for whatever, but you try and always, this is why you always try and buy as low as you can in the current market situation of movement, because the farther you sell from close, you know, like near the top, the less risk you have. Think about it. Let me show you. So say we sell it right here. Okay? What's our risk? 8 pips. Now, what if we go, oh, look at how strong and bullish it is. Let's buy up here. It's going to keep going. So if you buy up here and you need to put your stop down here to be safe, how many pips is that? That's 55 pips, man. You have to risk to do this trade, to buy up here. But if you got the signal to sell it, which I know it's kind of scary and you're close to picking the top, but you're better off finding a reason to sell it first, okay? And you sell it from higher because your risk is less. You buy it from lower if you think it's going up because your risk is less. You don't buy high and sell low. You buy low and sell high, right? Right. But anyway, just that thought process of wiring that into your brain, because believe me, humans are wired the opposite of that. They'll want to buy it up here instead of sell it. They'll want to sell it down here instead of buying it. Okay? Because that's how we're wired. We're human. It's not that I'm, how would you say, you know, trying to mock you or cut you up or whatever. I'm just trying to get you rewired a little bit so that you can trade better. That's all. Anyway, that was the trade right there. Sell it right there. See, it's still quite a bit of risk. See, it's like 21 pips risk. But you got that 21 pips for sure. You got like 50 all the way down to the bottom. Not that you would have got 50, but you know what I'm saying. All right, let's move on. Actually, before I move on, I'm going to go to the oil chart, okay? Here's the oil chart. I'm going to show you something. I'm going to show you how honest I am, and I'm not just full of shit telling you one thing one day, then telling you another thing another day. So I told you, okay, yesterday that I sold it somewhere in here, remember? And then when I did the video or whatever, it was somewhere down here. And I said to you, I said, I'm not perfect either. I don't have perfect patience either. And I said, I'm probably going to close the trade right after I click, you know, the end of this video, and I'm going to get out of my trade somewhere right here. Well, that's what I did. And look, it went right down. My target was right at the red line here. It went right to that. It went right to the target where I thought it was going to go, which was the low of the previous day. See, I'm not perfect either. I don't got the patience of like Superman. You know what I'm saying? I don't, because you got real money on the line. It's playing with your mind, you know, because you could lose. It could, when I told you I was probably going to close the trade in a few minutes, you know, it could have went back up here. Look at, I got in way over here, kept going back up, back up, back up, back up. Then it came way down here and I didn't take it, and it goes back up again. And then again, back up, back up, back up. It just drove you nutso. And then look at this one. Went all the way back up to 70 bucks a barrel. And you would think, oh shit, that's a strong move. It's probably going to keep going. And I should get out. And that's what was going on in my mind. When the price came back up here again, I was going, oh fuck, this isn't going to work out. But look, it did work out. And I got out here. I got in here. I got like 70. Right there. Or 74. Yeah, I got out right there. I got 74 pips from it. But you see all those times that it was scaring me to get out? It was telling me, get out, get out, get out. And I didn't get out. I was stubborn. And it paid off. But then I was kind of stupid because I didn't have the willpower or the patience to take it down to my target down here, which would have been 103 points on the oil. See? That's the way it goes. And then there was a trade after that, but that's yesterday. See? Right here, low and lower low. Right here. Would have got in here. See? Went up another 50 pips again. Points. But anyway, we'll take a look at this in a second. Let me go back now to what I was looking at. Oh yeah, I was looking at the pound. Okay, let's look at the euro now. Let's move on. Move on, Jason. You're talking too much. There's another knockdown, smackdown. You see it? I see it. Because they're following each other. See, right there. Right on the opening of this candle right here. Your stop was 16 pips. Went down 24. Same kind of trade. Look, see? Here's the wick. Wow. No, not really. Well, we can draw it from here. You can draw it from the body, too. Just like that. And you would have bought it in here. And it went up 37 pips on the Euro USD. Then we had the pound yen. What did it give us? You know, this is a trade, low and lower low. You know that we're always looking for, when price is coming down, we're looking for a low, then a retracement, then a lower low, and we're going to get ready to buy. When the price is coming up, we're looking for a high and a higher high, right? And then we're looking to sell, right? But as you can see here, oh my God, it is divergent, that long thing. Look at this. Hiccups now, sorry. I didn't think there was divergence here, but there is, look. Right there. See, it even goes to the next one, even lower. That's divergent, man. That is divergence. Bear with me, I'm grabbing the wrong tools. It would have sold somewhere in there. Stop would have been just above 882. 182, whatever the hell it reads, it's the pound yen. 30 pip stop. You would have got your 33 pips right there. You would have got your 1-to-1 right there. And then we had the news, non-farm payroll. There was a smackdown there. Look at that. Right there on the opening of this candle. See, here's the one closing above the moving averages. Then here's the one where they smacked it down. It would have been better if they would have gave us a lower, if the low would have been right there instead of here with the wick, but still, you could have sold it. Your stop would be 43 pips. You got it in like 15 minutes or less. You got your 42 pips. And look, 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 there's another one right freaking there, staring me flat in the face. right there. Higher close, next one opens up, smack it down. This one opens up, sell it right here. Went down 32 pips there, or if you took it to the bottom, to the 10 o'clock news, it went down 65 points. And what do we see down here? What do we see? What do we see? Do you see what I see? A buy, staring in your face. Yes, another buy to go high. Yes, another buy to go high. Hi, hi, hi. Yeah, I know. I should go solo. Go so low that you guys can't hear me. That's solo. All right. Now, actually, I can sing. Not so good today. My brother can sing. Should have been a rock star. Didn't happen. He said no to a very, very famous band in Los Angeles in 1982. I won't say any names. He should have been a fucking rock star, man. Making millions. And I know you won't believe this either, but he had the opportunity to be the front man for Guns N' Roses, but he didn't do it. And there's other bands too, countless bands. So you can see that, yeah, he should have been a fucking rock star, but he said no to the one guy he should have never said no to, but he said no because he didn't like that style of music. It was like with the devil, Satan, upside down crosses. That wasn't his thing. That's why he said no. But anyway, the stop would have been 43 and it went up 52. You would have got your 1-to-1 right there. Sorry to go on about my brother there, but things just trigger in my mind and I start talking. Let's look at the euro yen now. Oh, look at the euro yen. Look at that big fucking smackdown, eh? Holy shit. Right here, let me show you. It's on everything today, this smackdown trade. See? Right here. Sell it right on the opening, right here. Stop was 40 points. What is this? We're looking at euro yen. Went down 56. And then look at this. What's this? What's this there? See how I always ask it? Because I want you to look for what I'm about to tell you so that you learn and you can look for them yourself and you can trade to win. Double bottom, ladies and gentlemen. Is it perfect? No, but it looks pretty darn good to me. And right here, and right here. See how this one's so much smaller than this one? It's screaming at you. Buy! Buy now! Right here, buy it. Stop was 21 points, went up 54. You got your 2-to-1 there. You also had a lower close, buy, up it goes. Here's another little one right here too. This one had 17 points potential. This one had 16 points potential on the euro yen. Okay, let's look at gold now. Oh, was there a trade up here? I don't think so. Oh, there was. It doesn't look like there was, but there was. See? You see the space between here and here? It's divergent. That was divergent too, just like the other one we were just looking at. But it deceives you because it's such a longer, big mountain than this one. It looks like this is higher than this mountain peak, and it isn't. It isn't. Right here, high and higher, high. That's why, okay, that's why I always pull the indicator chart right up so you can see it better. That's why I do that, ladies and gentlemen. It's like a confirmation. You pull it up, you check it out. If this one's lower than this one, then this one's going down, this one's going up. That spells out one word: divergence. Bullish divergence. Yes, indeed. right here. Would have bought it. 16 pip stop, and it went up 52 pips, which was good. What did I? Yeah, I just, I just did that. I put the fucking arrow in the wrong place. I'm in La La Land or something. I don't know. The arrow is supposed to be a down arrow. The sell is from up here, not here. Even though there might be a trade there. Let me see. Yeah, there's a trade there too. No, it's here, the trade, not here. I was putting the arrow here. Sorry, that was my bad. That was a mistake. I'm sorry. But there is divergence here. Low and lower low, see? And then look, it's going up, see? There was another divergence trade right there to right there. And right there to right there, see? It's divergence. Oh, no. It's right here. So if you would have got in long right there, your stop would have been 34 pips. Oh, so close. Oh, no, look at that. 34 pips. That's so funny when it nails it right on. You see, that just goes to show how I've been telling you for 6 months now, if you've been listening that long, how important it is to go for a 1-to-1 win-loss ratio. Okay? Okay. I know, y'all want to go for more points and more pips, and yeah, it's possible. It can happen. You can go for double that, and it can hit your target. But more often than not, it will not hit your target, and that's why I preach that to you. I want you guys to be safe and take what you got and run. Run for the foothills, man. Okay? All right. Oh, did I tell you that I am not a financial advisor? This video channel is for illustration purposes only. Okay, let's move on. Gold. Same thing. See the knockdown right here? Same thing. They all did it at the exact same freaking time. I could bet you a nickel that I would be right. Yeah, I'd be right. You tell me. There's an algorithm running here. Yes, it's on different pairs. Yes, it's different amounts of ticks or points. But they're all doing the same thing at the same time. Why is that? Why is that? Because they're running a program to make it do that. That's why. It's like easy to figure out. Telling you, man. Michael, from whatever state he's from, he knows what he's talking about. He ain't feeding you no bullshit. That's how he figured out how to be very successful at trading these markets. He figured out the algo. Yeah. So anyway, here's the smackdown. Close right here. You would have sold right here. Boom. Down it goes. 185, 186 ticks. This is gold. Your stop would have been 50 ticks. Would have been beautiful. Anyway. And then we look at oil. Yeah, oil. I was trading oil again today. Yeah, I wish I wasn't. Because I lost. Because I went and made bacon and eggs, for fuck's sakes. My stomach come a-calling to me. Feed me. Feed me. Feed me, Jason. Feed me. Okay. So, I sold it right in here. Here was the cross down. Here was the divergence. Everything was set up. Even my 5 and 15 were arrows, down arrows. Everything was there. Everything was perfect. I had my take profit here. Okay? I had my stop here. when it first came down, see, I wish I woulda, coulda, shoulda, but I didn't take my profit, but it was only half of my profit target of what I was looking for. So I didn't take it. And then it goes sideways, and it goes back up. And I should have took it here, and I didn't take it. See? Shoulda, woulda, coulda, shoulda. You can't say that after the fact. It's just, it's not a good thing to say. But I'm just showing you how a lot of people say, oh, I wish I would have took it there before it rallied up there. Yeah. But I left. It was before this candle here closed up here. I left before that. My stomach was calling to me. So I went and I made bacon and eggs. I was like right here saying, okay, maybe it's going to come down now and hit my target and go after the stops underneath here. But no. They didn't do that. They didn't do that. Instead, they took it up and they hit my stop right here. So what I made yesterday, the 74 pips that I told you about earlier, gone today. Vanished. Poof. Bye-bye. Did I do another trade? No. Because by the time I came back here, it was this big wick right here. And they took my stop. So I just said, fuck it. Leave it alone. Let it do whatever it was going to do. I did the setup right, but it didn't go to my target. And that's what happens sometimes. Sometimes it just doesn't go to your target. And you got to live with it and deal with it. But you see right here, if I would have stayed here and watched it, okay, here's the double bottom. And here's the divergence. And right here on the opening of this candle, where I should have bailed out at almost break even and buy it, right? If I would have bought it, well, look at how far it would have went. If I woulda, coulda, shoulda. But I wasn't here, and I didn't. And I didn't want to buy a dip here because I didn't know. It was like chopping here. Could have went back down again. Like look what it's doing now. It's doing its stair step down now. Who knows what it's going to do now. But anyway, that's what happens in trading. Nobody's perfect. Nothing works out all the time. One day you make, 75 points. The next day you give back 80 points. Whatever it is. That's just the way it is with trading. Anyway, I hope you enjoyed the show today. I want to thank you for subscribing, and if you could please hit the like button. I want to thank you for giving the channel a like. Okay? If you keep trading this afternoon, be careful, be wise, and don't overtrade, meaning, instead of one lot, I'm going to try 5 lots. That's a surefire way to disaster. Anyway, have yourself a great weekend. Good luck and good trading.